Master your money, free your future. Welcome to Budget for Life. It is GameStop's earnings day. Woo! Q4 and full year earnings for 2025. It's power hour. We got 45 minutes left until close. So if you're watching this on Wednesday or later on after the fact, feel free to jump forward 45 minutes if you want to get to earnings. But for the next 45 minutes, we're going to watch the stock a little bit, talk a little bit about expectations, get the chat bumping, and excited to be here with you guys. Excited to experience earnings with you. What's up, Red King? Glad you're here. What's up, Clark Kent? What up? What up? It is earnings day. Benjo, let's go. Jeff Slim. Super glad y'all are here. We got 7 people in here already. Thanks for the 3 likes. Also, thank you to the subscribers of the channel. So I'm trying this out for this stream. What's up, British? I made the comments to where you have to be a subscriber to chat. So you only have to be a subscriber for a total of 1 minute for the chat to work. So I'm not trying to create a secret community, not trying to block anyone out. But hey, if you want to be a part of the chat with us, just drop a sub. We're trying to get to 3776, which is the altitude of Mount Fuji. If you want to be a part of the Pokey Sub Club, we'd love for you to be a part of it. Also, thank you to those who join as fans and friends of the channel. I do appreciate it. What's up, Ryan? What's up, Some Grady? So we'll do some watching the stock. I also want to talk about the things I am most excited about for earnings. We're also going to talk about a little insight from one of you guys, one of the followers of the channel, on the analyst numbers. Because as I've been saying, the analysts are showing 1.47 billion in revenue and 31 cents per share in EPS, both of which are above what I'm estimating at about 1.3, and 75 divided by 447 is less in EPS. About, what is that? What's 0.31 times 447? 1.38. So yeah, I am, what's that? 60 million lower on net income. Here is the interesting insight, and then we'll dive into what I'm hyped about for earnings. Let's see if I can find it so you guys can see it as well. What's up? What's up, everyone? What's up, John 2Day? What's up, Jaspo? So let's see. Is this some weird inception here? Okay, here we go. Bato Boy said, I don't know. I haven't fact checked this. He's talking about a 37-cent estimate. I'm looking at a 31-cent estimate. So maybe we are going off of different estimate numbers here. But the question is, what's this estimate coming from? Because publicly there are no, what's up? Hey, thanks, John Today. He says, Budget for Life is the only GME analyst I trust. Thanks, John Today. Keeping it real over here. Archie, oh, not Archie, a Richie Rich, let's go. Publicly, there are no analysts for GameStop. So where are these estimates coming from? I don't know. Honestly, why don't we just Google it real quick? Where are the estimates for GME earnings coming from? What are the odds that we learn this quickly? I don't see. This is interesting. So this 0.37 must be like 0.31 diluted. That must be the difference between the 0.37 and the 0.31. This 0.37. So there's no current analyst, but this AI is saying it's coming from analysts, which Bato Boy is saying that this Wall Street consensus was last revised on September 19th. What's up, Clown Doctor? Good to see you as well. What's up, British? So it's quite possible that this is the case. At least Battleboy and Google AI agree, because none of these companies mentioned Zacks, Seeking Alpha, TradingView, Yahoo, like no Wall Street firm currently covers GameStop. What analysts currently cover GME? Alicia Reese? Since when? Like, since when? Let's see. Let's see if any of these names are active, because that's really what I am interested to see. Alicia Reese, GME. This is from September, and they dropped their coverage, right? So is that the best one you got? Weiss Ratings gives a buy, sell, hold, which is not the same thing. What about Edward Wu? Edward Wu, GME. 4 years. Is this from 4 years ago? GameStop. These seriously are actually from 4 years ago. So it's crazy. What about this one? Yep, 5 years ago. So confirmed, right? Stop. The question is, John Today says if he Googles who gives GameStop their earnings estimates, are there any analysts? And the Google's response is basically, it's a guess. Clown Dog says it could be you, bro. Carry the torch. I am a analyst of GameStop, but I'm not on Wall Street. I've never even been to New York. So what's up, 94, you guys? Glad you're here. 40 minutes till we get some earnings numbers. Cannot wait. British asked Gemini about some results estimates for Q4. And its AI was also doing some fiction. So all that to say, this estimate, I assumed with where technology is today. Jonathan Pickett says, hit that like button. What's up, Gavin? The earliest that they might announce an acquisition would be on this earnings. The next earliest would be tomorrow on a news release, just like they've waited a day to release news about like convertibles or the warrants. They could tomorrow after hours be like, hey, surprise, we're acquiring a company. I would not be surprised if that happened, but I don't think it will happen. I think they will do Cohen's vote first, but I think it's totally possible. Like, I'd give it a solid 30% chance or something that they announce something like today or tomorrow, which would be pretty epic. What was I saying? I would think with where technology is today, that a computer would just be able to be like, beep, bop, boop, here's like analyst estimates. But it turns out that these numbers, it could be a computer, right? I don't know if we have anything definitive, but from what I just Googled and from whatever Battleboy found, that these are actually genuinely the estimates for this quarter that were made 6 months ago from someone who does not cover the stock anymore. So what does that mean? Well, for one, it means that the Bitcoin loss is not in play. So if you take the Bitcoin loss out, which is a $163 million loss, all of a sudden, I've got $238 million estimated income, and they have 138. So the estimated net income just from operations, there's a $100 million swing. And this was a bearish analyst, right? They had a sell rating. They had a $10 to $12 price target on the stock. Their estimates were $100 million below mine, in spite of the fact that their revenue estimate, look at this, 1.47, almost $200 million higher than mine, which means they estimated margins absolutely collapsing and SG&A potentially growing substantially as well. Like, how do you have 200 million more in revenue and still end up 100 million short on net income? All that to say, that report, that analyst, there's probably a reason they don't cover the stock anymore. And their estimates were all over the place. Blessed beyond measure, great to see you here. So, I mean, yeah, the accusation, the speculation is that they are using an old projection. Like an analyst, hypothetically, you give it 2 more quarters, then hypothetically, if what they're currently doing is using estimates that are 6 months old, like an analyst could have estimates for many quarters out, right? Just like I have estimates for operating income for many quarters out, right? But at some point, I don't, right? So the thought would be, I guess, that eventually they'll run out of estimates, but probably some analysts will start covering the stock again before that happens, because we're expecting, obviously, some pretty exciting events to happen on the stock. The main moral, though, of what I'm saying is you shouldn't care at all about headlines that talk about whether GameStop like beats or misses earnings estimates, because there basically are no earnings estimates that are legitimate. They're 6 months old. They're not based on the current actual analysis. I mean, like, these estimates wouldn't have even had Q3 numbers in the mix, you know? And just barely, would they have even had Q2? Second quarter, okay, yeah, they would have Q2 numbers, just barely, but they wouldn't have Q3 and beyond. So take all of the earnings estimates with huge grains of salt. Some Grady said, can you clarify what you mean about the Bitcoin loss not mattering? I'm saying that if these analysts, if this estimate of 31 or 37 cents per share is an estimate that was created 6 months ago, then 6 months ago they would not have been estimating a Bitcoin loss. So that's why I was adjusting the Bitcoin loss. The Bitcoin loss definitely affects net income, for sure. If the board, Clown Doctor says, if the board operates on bad news early, good news right on time, what's the latest date they could announce an acquisition if it has already happened? I don't know the laws for that. I think they have about a month before they would have to announce it, right? I think practically the latest that they would announce an acquisition would be July, because they don't want to push it too close with the warrants expiry. Actor Rehab is back from a Costa Rican vacation, driving home to watch the pod. Hey, thanks. Glad you're back, and congrats on a fun vacation. Correct. So some Grady says, so what I'm saying is that I'm not worried about outdated earnings misses on outdated analyst estimates. Correct. I don't think that these estimates are real or current if they are, it's a computer. It's not a person. No, there are no public analysts on Wall Street for GameStop, period. That I know for sure. Whether or not there are old analysts that they're using for these numbers, or if they're just using a simulated or computerized version, I don't know for sure. But speculatively, these are actually just old analyst estimates, which makes them incredibly irrelevant, unfortunately. Unfortunately for the headlines. Regardless, I would, if I were you or if I were me, focus on this of the company, I'd be looking more at quarter over quarter and year over year trends for Q4 and for the full year. Like that's what matters, right? What's the business actually doing is what matters. Whether it's higher or lower than a random number that we cannot get any confirmation on how that number was derived does not matter. The stock tanking a little bit heading into close, which is kind of exciting on a how might it react to earnings. I always get nervous if we rip heading into earnings for a big letdown. But if we're letting out some steam now, maybe we surprise to the upside. And so I mentioned this in my very long, 4 hours worth of, here, let's get some extra white space here. My 4 hours worth of live stream on this past Friday. But these numbers, right, if you want to skew them bearish, all you can really say is like, hey, it missed estimates, right? Missed top line estimates, missed bottom line estimates. Like that's really all you have to go off of, because top line revenue is actually growing year over year for the quarter and potentially for the full year as well. SG&A is continuing to get slashed. Margins are super strong. The Bitcoin loss is one time in nature, and no one's valuing Bitcoin on a multiple basis anyways. If you want to take trailing 12-month interest income and Bitcoin income / loss, you're still at $125 million gain. So the Bitcoin loss isn't even this big negative thing. And then you have the implied sales per store number with the new store count. And if they're doing numbers anywhere close to this type of revenue on literally a fraction of the store count, that is like explosive excitement, right? That's 50% growth year over year in sales per store compared to Q4, right? From $400,000 sold in a store in Q4 of last year to $600,000 in Q4 of this year is just insane. And that number is going to grow. Like that's still including France being in the mix. And they are selling France probably during Q1, right? As we speak, they maybe have already sold France, but probably not. They probably will do it in the next 6 weeks or so. February, March, April. That is GameStop's Q1. So anyways, here we are waiting for the news for GameStop's earnings. Right here, right? Let's see. Quarterly report. We'll get the 8K first. We'll get the 10Q, or really 10K. What was the time gap last time? The 10K usually takes a little bit longer, right? Where are we? Take me to, here we go, 8K and 10K. It's still same day. last year. So I wonder, 1618 was when the 10K came out. And 1611. Okay, so super close to each other, just like 10 minutes apart. Wonderful. Wonderful. We're going to dive into it here. That's what we're here for. Hopefully that. What's up, Demon Clippy? Happy to be here live. Cheers. 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 Y'all enjoying a beverage? I'm just on a iced latte, unsweet. Demon Clippy says also use Godel Terminal. Serves the filings to you. I usually like just going right at them, but I've never even heard of this. Godel Terminal. I gotta pay $1,000 a year for this thing? You're trying to bankrupt the channel. Oh, he says just don't make an account and it's free. Okay, well, I'll look at this another day. Looks kind of cool, whatever it is. I'm still not really sure if I like it. Normally, if I'm looking at data, I want to see the source of the data rather than a data aggregator. Even though this would be nice visually, I just don't. I don't want to trust anyone. You know what I mean? Like I want to see what does GameStop have to say about GameStop. But Demon Clippy says, check it out. So I'll check it out. Battle Boy, what's up? Free, what is up? Hope for the best, expect for a dip, says Free. Battle Boy, what do you think of the fact that we have to beat estimates made by AI? I mean, the nice thing is we don't have to beat them, you know? And like Clipgrid said, what do you think will happen to GME? I have 2,200 shares. What's up, Ryan Young? What's up, John Chess? What do I think the stock's going to do in the next 12 hours is such a random question, you know? Like it's more important to think about what is the stock going to do over the next 12 months or even 12 years rather than 12 hours. 12 years would be a little bit long of a time horizon because so much is going to change in the world in that amount of time. Not that you want to, you still care about that time horizon, but you just can't optimize for it that well with our current information. But a 12 to 60 month time horizon is really more of what you would want to be solving for. And the 12 to 60 month is just looking so great for GME. How does the market react to earnings? Like, it's anyone's guess. But I think the fact that this has been our past month makes me think that it might react pretty nicely. Also, the fact that we saw a Cohen buy right in here, right around that 2050 range. Generally, Ryan Cohen buys at the deep lows. So I would be a little bit surprised if we retraced all the way to 20. And given the fact that we're already at 23, it's like I would think it's more likely we're at 24 plus than at 21 and under. If you call 2288, if you call that 23, do I think it's more likely that we're $1 plus higher or $1 plus lower? I would think it's more likely we're $1 plus higher. At least when you're thinking end of week. I think there's a chance that they keep earnings dry, flash crash, And then if that happens, then I would start to get a little bit more excited about what if they actually do make an acquisition announcement after hours tomorrow, Wednesday, March 25th. Like I think that's a possibility for sure. Clipgrid says, based off your projections, do you think they will beat or miss on these earnings and why? I guess is a better question. Also, didn't Jimmy buy a bunch of Bitcoin? Hasn't Bitcoin gone down? Yeah, Bitcoin's gone down, and that's already been priced in. They've lost $160 million worth of assets. So if you divide that out by their share count, they have 447 shares. So hypothetically, 163 divided by 447, they've lost about 37 cents per share in cash, basically. Cash and cash equivalents. I'm calling Bitcoin a cash equivalent. Obviously, it's an investment, but it's liquid. You can sell it any day that you want to. So that's already happened. It's not like no one's going to react to that over earnings. And again, that's just one of those things that if that's a headline, you know to ignore the headline. Like it's old news. It's already happened. As far as beating or missing estimates, I have them missing estimates on top and bottom. But I think, so again, as far as headlines go, if you see that in a headline, the other part of what I'm getting at is I think you can just ignore that, because I don't think the estimates are even real. There's no people behind them. So what's up, Wisco? Yes, Benjo, we will see the store count in the 10K, which is one of the things I think it's most likely that the stock would react to positively, is a wow from how low SG&A might be, and a wow from how low the store count might be, and how resilient revenue is in spite of a lower store count. I think that is very possible. But will public markets, like will institutions care about making or missing estimates? Like right now, like the institutions know what we know, and they know that no one's covering the stock. So if they want to be short GME, I don't think it would be related to estimates being made or missed. I think it would be related to how they feel about these numbers. Like are they bullish or bearish on the fundamentals of the company? Or obviously if they are legacy short, and so scorched earth, they just have to keep shorting because that's all they can do, whatever. But is it possible that GameStop forces its way higher after this earnings? I think totally. Ryan Young says, Keith Gill during his last live stream, June 24, said the timeline should be 3 to 5 years for a turnaround, which we are officially in. Wonderlust says, let's go GME. Love you, Jeremy. Hey, thanks, bro. Love you as well. Sorry for assuming you're a bro. It's possible you're not. I cannot wait to see the store count numbers, honestly. I know y'all might not care about that much, but the implications of that are huge, because if they can sell the same amount of stuff with a third as many stores, let's say a year from now, they get down to 1,000 or less stores and their revenue is actually going up, like that means big money profits. Okay. It'll be medium money profits right now because they still have all the costs of closing the stores. But once the stores are closed, they're basically finished with the cost that they had to pay to close the stores. You know what I mean? So once you see a year out from there, where it's like, wait, like right now, we think, or let's just take Q3. SG&A was $221 million, and 187 million of that was store related. We think, or like analysts assume, 187 million. That's how much it costs for them to operate their stores. And it's like, well, no. That's how much it costs for them to operate their stores and to close all of the stores that they closed. Like, how many of these millions were spent on closing stores? How many of these millions were spent on closing stores? How many of these? How many of these? Right? You have in total $740 million in store-related SG&A, and you might have 100 million of that that's literally just store closure expenses that are one-time in nature. Now, it's one time for the second year in a row, and it's going to be one time again probably for next year also. But it's possible that this number, this store count number, comes in so stinking low that they're basically like 80+% of the way done, and that actually the cost of closing stores next year and beyond is actually way lower than what it was this year and previously, which means hypothetically, right, that's another 100 million for free in full year net income. And when you're looking at net income of currently 366 million, if you can start, sorry, you can't see that. If you can start baking that in plus 100, right, that's a 30% bump every year into perpetuity. It's not that exciting on the surface, but it's super exciting when you think about, wait, how would I value, like, think about that from a valuation perspective. $100 million of profit every year. Like, if you give a 20 PE to that, not a 30, right? Nothing crazy. Just give it a 20 PE, just guaranteed 100 million in profit times 20 is 100 million, aka 2 billion, right? Yeah. That's a $2 billion enterprise value on just the savings in SG&A from the stores being closed. Isn't that crazy? But it gets better. It gets better because with the store closures, also, this number goes up. The margin number, because a higher percentage of sales are sold online rather than in store. So margin's improving, right? When you have, let's say, 4 billion in annualized sales, like what's 1% of 4 billion? $40 million. So if this 30 can inch its way closer to 35 sustainably, that's 40 million times 5. That's $200 million per year in profit from improved margins related to shifting to e-commerce. Another $100 million per year in profit from these store-related SG&A coming down. And again, 300 million, you want to give a 20 PE to that, you're looking at a $6 billion enterprise value improvement just from closing the stores. And it's not just closing the stores, it's also, you have to retain the customers. But when you do that successfully, which GameStop has so far, right, they are keeping way more customers than they're losing relative to the amount of stores they're closing. And so if they can continue to do that, to think about $6 billion in improvement, it's like, well, hello, that's 60% upside right there. That's 60% upside right there just on cost cutting. So I know of course, it's more exciting to talk about the acquisition. Will it be announced? What could it be? The top line numbers, power packs, which we probably won't see the numbers for, but excited to find out. We probably won't get those updates, but the update we're going to get could be a 60% upside update. So super exciting to think about. What's up, Argent Purr? What's up, Easy Riders? We've got 10 minutes. Okay, Clip Grin and Demon Clip, you're going crazy. on the chat arguing about the stock. And I might just have to like block you, Clipgrid. Are you being sassy or is it respectful? Looks like it's respectful in there. Let's try to avoid arguing with each other in the chat though. Jay Card, what's up? Yeah, it would be cool if they showed. We got 180 people, 10 minutes till the numbers. Happy earnings day, Mix. Thankful for you guys. Let's see how the sub count did. Let's go for more subs. Appreciate you guys. Seriously, do appreciate you. What's up, Jeff? Jeff Jolly, Michael, great to see you. Patrick, great to see you here. I would rather them hold Bitcoin. I'd be a little bit bummed if they sold it already without first making an acquisition announcement. He asked me, would I rather see it held or sold? I wouldn't even mind if they bought a little bit more, but I would be kind of bummed if they bought more because those shares would also, those holdings in Bitcoin would also already be down with only 5 weeks left to recover. 5 weeks until the end of Q1, which they'll have to base their Q1 Bitcoin gain or loss on. Bitcoin, just to give you guys a little grid. So Q4 happened October, right? 118 all the way to end of January, down here at 78. So if they bought this dip in December, they were averaging in at 87, which would only increase their loss reported for Q4. And now we are even another 20,000 per, like another 30% lower than that. So hopefully they didn't buy more at this level, but I do think it's possible. However, he did say in his article, whatever, with one of those articles that came out, that the acquisition that he's getting into is much more exciting than Bitcoin. Sorry, it's November to January, some greedy. You're right. November, December, January is Q4. So whatever. Same gist to what I said though. Started at 110, not 118. Everything else that I said still carries. So hopefully they didn't average more in. But if they were averaging more in right now, I wouldn't be mad to be buying Bitcoin in the 60s. But I don't think he is. It sounds like he's more interested in continuing to build GameStop through acquisition. And I think overall, Cohen regrets buying Bitcoin. I think he said, why the heck did I do that? I should have just left it in cash. And I'm not going to do that again, I think, is how he's probably thinking about it. Almost 200 of you guys. Pumped to see you here. What's up, Afghan? What is up? Waiting patiently. What's up? Lee Allen. Yo, great to see you here. Chunkster says, like the video. I do appreciate it. Yeah, right now I'm batting 250 likes with 200 viewers. So I will be stuck in the minor leagues forever at this like rate. So I would appreciate a like. Battle Boy wants to see the cap. Today we're going with the H. Big H. What's up, Chris? He's tempted to throw 10K in a GME right now. This is a pretty attractive entry point. If I had 10K sitting in the bank, I would start feeling uncomfortable about how it's not in GME. That's how I personally would feel. What's up, Herman? Great to see you. RJKB. What is the Switch news? He says, how are we feeling about the Switch news? 5 minutes to close. Let's go. Let's go. Don Wego says, thanks for doing this for us. Appreciate it. Appreciate it, Don Wego. Man, 5 minutes. I don't want to click off of the stock right now because sometimes you get a sneak peek into earnings reaction a couple minutes before the numbers are actually released. Argent Per does not think it's going to be a great quarter. SA Ink and Wheel. Good luck to my fellow apes. Thanks for the good vibes. Jeff, do we need to be nervous? No, there's nothing to be nervous about. We're at 2288. You know what I mean? Like, what, if we were at 3288, you should feel a little nervous. Like, oh, geez, what's about to happen? But at 23, it's like, how, what's really the worst that you could envision as far as GME's trading price over the next 3 months, between now and Q1. Now, if you have a position in GME that you need to liquidate between now and in June, I still don't think you need to be nervous, right? Like if you have to pay off your mortgage or if you have to pay rent next month with money that's currently in GME, I still don't think you should feel nervous. But if you have to pay rent next, like this Friday, that's a really short time horizon. GME could definitely be lower for 3 days from now than it is now. But no, I'm feeling very excited. Very excited. Ignite Fire Dance, great to see you. Argent Per says the floor is 20 regardless. I think the floor is rising with the fundamentals, but it is currently kind of in that range. But it used to be much lower. Henry says sell the kidney for GME. Some Grady says stop paying rent. Easy hack. Gavin's wondering what Roaring Kitty's doing right now. Yeah, he's probably doing something. Michael Burry's burner account. Thanks for joining us, Michael Burry. Again, the Bitcoin decline is just 36 cents per share. That's literally the entirety of GameStop's lost value is 36 cents per share based on Q4's numbers. So I do not think Bitcoin narrative just takes over the stock by any means. Donna Bell. Good either way. Sell both kidneys. Look out. Okay, here we go. So a little bit of movement, a little bit of a downward push heading into close. Man, I can't wait, guys. Can't wait. So we'll get to see the gist of their margins, their top line, their net income in the 8K, right, which will get released within minutes after close. About 10 minutes later, we'll get the 10K, and we'll get to see if PowerPack's materiality is reached, store count number, any other major headlines that we want to dive into. I'll be going through it top to bottom, giving my initial reactions, and of course, I'll be making videos later in the week. British says, we're all excited. Can't you tell? Yes, very excited. More videos later into the week with some more thought out feedback on earnings and anything that that doesn't strike me right away, but after analyzing it a little further, I can offer as far as my personal reaction to, is this good news? Is this bad news, right? Is it bullish? Is it bearish? To what extent? Very excited for that. So the Switch news is that Nintendo cut Switch production in the US. I don't think I care about that at all. Does that mean like literal production? I can't go to it now. We'll have to save that for another day. I can't click off the stock at 2:59 p.m. on earnings day. Like I don't think that whether or not they want to assemble them in the US is not really a big factor as far as how many of them will they be able to sell in the US. So to me, it's kind of like, it's like saying it's news that some company moves their call center to India. It's like, oh no, is that bad news? Because they're not doing this in the US. I'm like, oh, they probably just want to like make more money and, you know. Oh, here we go. Here we go. A little bit of dip. Oh, geez. So fun. Argent Purse says demand for the Switch sucks. Yeah, demand for the best-selling console of all time over the time horizon that it's been out, demand sucks. No one wants to buy the console that they've bought historically faster than any console they've ever bought. You know, I'm not saying Switch 2 blew expectations out of the water. It's a little bit of a disappointment to some people based on how high expectations were. Let's go. Okay, so around 2282 was the close before numbers, and we are heading up to 2293. Eventually, we will leave the stock to get the numbers, but I doubt they're out quite yet. Probably not, right? So we'll kind of toggle back and forth. A little bit of stock, a little bit of numbers. So far, though, GME looks a little bit happy. Trying to fight over 23. Let's go. 287 of you guys. What's up? Hit the like button. Give me a sub if you want to. Drop a super if you're feeling crazy. All the earnings go to GME book. Sorry, DRS book GME shares. I don't want any shares of DRS. It's not GME book DRS shares. It's DRS book GME shares. Let's go. Let's go. Show us the numbers. Oh, can't wait. Okay, back to 2290. No numbers yet. Boom! Look at that. Holy smokes. It just slammed 5% down to 2166. Still no numbers yet. But the algos always get the numbers before the normies. Fighting to try to stay at 22. Okay, this is very interesting. Very interesting. 2150. Okay, so what's the headline? Argent Purr. Argent Purr says that's the easiest prediction on earth that you didn't predict. Just so you'll know in the chat, I am never making trades with 1 hour time horizons. So an initial reaction 3 minutes after close to numbers we don't even see yet, literally unrelated to my investment thesis. Herman says, see windows at the same, 2 windows at the same time. Yeah, I could drag it out and just be refreshing it here by my lonesome. Still no numbers yet, though. Let's go. MASTR says it's up. Missed revenue and beat EPS apparently, says Holly. I still don't see it. Here we go. Here we go. Here's what we got so far. A little news release. Woo! What's up? What's up? Okay, we're fighting around 22 on the stock. We'll leave that for now. Pretty fun. Okay. Net sales 1.1 billion compared to 1.28 for the fourth quarter. Okay, so I was high on sales. I had us at 1.28 again. So that is wonderful. SG&A 241. That's even okay. I had it 226, but still a $40 million improvement year over year on SG&A. Operating income was 135 million. So that is a $55 million improvement to operating income. And once again, we have impairments that are artificially dragging that number down. So without impairments, operating income would have been 147.7. A $75 million improvement year over year. Or not quite 75 million, but whatever. 68 million, which is pretty epic. Net income. How do they do that? 128 million? I had it down at 75 million. So I wonder what happened. And then if you exclude, so maybe I was way up on my Bitcoin estimate. Like the Bitcoin loss is actually not as severe as I thought it would be. Without Bitcoin, they would have made $291 million in net income in Q4. Which is amazing. Without Bitcoin, where did I have them without Bitcoin? I had them at 238. I had them at, without the Bitcoin loss, I had them at $238 million in net income. And they actually made 291 million in net income. That means they are, and I had them at 238 with an extra 150 million in sales and an extra 40 or 20 million in SG&A. That means their margins are way higher than this, or PowerPacks just started printing money. Holy smokes. This is not bearish at all. How's the stock? Oh yeah, the stock's back above 23. Let's go. Where's Argent Per? You want to talk any trash again about how you know the future? Sorry for calling you out. Y'all can have fun. What's up, Chris Clifton, channel member? Let's go. We'll keep taking in the earnings in chunks. We'll spend a little bit of time watching the stock, a little bit of time crunching the numbers. Herman says, see the warrants. What are the warrants doing? Dun, dun. Let's go. Yeah, nice pop on the warrants. Borrow rate still at 106. Let's go. Coming down a little bit. IV at 52. What's up, Roder Burgess? What's up, Henry? We've only just, what's up, Mr. Beakers? I am looking forward to continuing to dive into the numbers, but so far, their margin, their Bitcoin loss was not quite as severe as thought, and their margins are way higher than I thought. Way higher than I thought. Let's keep diving into it. So for the year, 3.6 billion, about a $200 million decline. SG&A also down by about 200 million. Operating income of 232 million for the full year compared to a loss for last year. And another 60 million in operating income if you net out all the one-time asset impairments, which are pretty much related to getting rid of Canada and France. Net income more than triple from last year. Crazy. Oh my gosh. And if you adjust it for all the one-time losses, which are Bitcoin losses, the impairments related to France and Canada, and the phony 40 million in interest expense that wasn't a real interest expense related to issuing the warrants. If you adjust all of that, you've got a $650 million net income here. So crazy. And so far, relatively mild on the stock, but it's kind of wanting to push higher because these are super good numbers. What is the volume like? Let's see. Thinking real hard about this one. Volume is decent. I mean, probably relatively low for an earnings day, but not bad. So get this out of my life. Show me this guy. Okay, they're not holding a conference call. Okay, here we go. Here's some more numbers for us to check out. 500 of you guys in here. Welcome, welcome, welcome. Appreciate you stopping by for some analysis of GameStop's earnings. Whether the stock is up or down does not change the quality of their earnings, but it is more fun when it's up. I think we can all agree on that. I'm trying to focus on the earnings, but I'm also maybe I should just keep enjoying the stock for a little bit. What's up, Grape Ape? Great to see you here. Appreciate all y'all. Let's see. What else do we want to learn? So 86 million in interest income. 6.8. Oh, here you go. This is the swing of the profitability. Holy smokes. So the margins aren't crazy high. It's a one time, I mean, who knows how many times, but instead of paying 3.3 million in income tax, they received a $51 million income tax benefit. So they got paid. They got paid all this money, and then they got paid to get paid. I thought they would pay 12 million in income taxes. Instead, they got paid 51 million. That's the swing right there. That's the $63 million swing from what happened to what I thought would happen. What's up, Andrew Tomlinson? Great to see you here. 151 million loss in Bitcoin, 6.8 in other income. I thought it would be 5. So that is pretty epic. It means the fact that we are seeing other income again in and of itself, to me, is confirmation that PowerPax is being treated as equity accounting. It's a joint venture, not reported within GameStop's numbers, but treated as another company that GameStop owns partial ownership of. And so when they receive profit distributions from the company, it gets put into other income. 29 cents EPS. Gross profit at 35%. Okay, that's actually amazing. That's actually amazing. 35% is their gross margin, like their gross profit percentage. I thought it would be 30. It's crazy. Stocks back down. Warrants are still up a nice bit. We got some forward-looking statements on acquisitions. Is that in here? Or no? Should I just keep going? I'll just keep going. So here's the full year numbers. Cost of sales down 300 million versus top line down 200 million. So gross profit actually up year over year. More gross profit and less SG&A. 54 million in asset impairments, which that's not going to happen every year by any means at all. So even this 232, it's really more like 300. Got some interest income. And then here you go, full year earnings about $1 per share. Here's some breakdown, US versus others. So France, still a loss in Q4. That is just embarrassing. Even in Q4, they were a loss. What do y'all think? Y'all think they're going to keep Australia? Australia just keeps squeaking out these tiny profits, and I think it's kind of screwing up their numbers. Like their profitability percentages. I just want them to close Australia and just be the lean and mean behemoth in the United States. But they might keep it. There you go. France improved a little bit. They only lost 2.2 million compared to losing 5.6 million last year. So lame. But in spite of France losing this profit, they did still account for 155 million in top line. So you have to brace for impact as it relates to year over year numbers again for 2026. Because this, about 10% of that is going to be gone off the jump. So if the 90% left grows year over year by 10%, that would actually be a 1% loss year over year in top line, because 90 growing by 10% gets you to 99%, which is less than 100%, right? So, and it's actually a little more than 10% of top line that's coming from France. So the bad news is that year over year sales comp numbers are still going to be a little bit lame, but I'm going to get to the 10K. I'm going to get to it. But the good news is that the bottom line numbers and the profitability numbers are going to look insane, right? Like only 165 million of SG&A is coming from the United States. And yet almost all the profits coming from the United States. So it's another $78 million in SG&A that potentially they'll be able to drop off over the coming years. The short squeeze info in the 10K is not new, just so you know. So there's full year. Here's the balance sheet. Marketable securities is almost definitely buying some more 12-month T-bills. Oh, look at that. Oh, no, they didn't. I don't think they sold any Bitcoin. I think that's just the current value. Yeah, that's the current value of their Bitcoin. They're still holding France for sale, so they haven't sold France yet. Put together, they have about 9 billion still in cash and securities, plus another 4 for Bitcoin. So their cash total did go up a little bit quarter over quarter. It's despite the Bitcoin being worth $120 million less. So that's pretty nice. Anything exciting here on the balance sheet? Lease liabilities. We'll get into that with the 10K. Cash flow. Did you send more money to... Okay, proceeds from a business sale unit. This is probably other income, that 3, which means the 6.5 of other income, probably only 3.5 of that is related to power packs. I don't think they sent any more money to power packs. Right. Okay, great. So power packs is able to self-finance at this point, which is pretty awesome. They are not needing to raise money from GameStop, but they are raising money from themselves, reinvesting that into the biz. And here's the cash flow for 52 weeks. So yeah, there's the same 17.5 that already happened in Q3. Hardware, software, collectibles mix for the... Okay, here you go. So 535 on the... So within the range of what I thought was totally possible. 535 was the hardware number. I thought as low as 525, totally possible. 203 is the software number. I thought 190, totally possible on software. So still above the overall threshold there. And collectibles was 365. I thought as low as 275 was totally possible. So that is all within range of what was very plausible from a top line perspective. And then there you have the full year numbers. So 29.2% of collectibles, full year revenue represented, which I mentioned just because, you know, Ryan Cohen talked about collectibles for the full year 2025 being nearly a third. So 29.2% ends up being that number that he described as nearly a third. Let's see what else we got. Yeah, impairments related to Canon France. Okay, let's head over to the 10K. Is it here? Here we go. Can you actually show it to me interactive? Here we go. This is a little bit annoying because it has red underlines, but the red underlines tell you if anything's different from past calls, from past reports. Here we go. By the way, how's the stock doing now? Okay, so really kind of flat. Some good stuff that is taken in. Nothing that it's thinking too hard about, which is great. Here's the inline for the 10K. Is new. What's new? Hey, I like this. I just really like this. I feel like they are illustrating this a little bit more clearly than they did last year. Is that true? Show me last year on the business. Affordable segments. Yeah, they illustrate that way more nicely. Like right off the jump. They're like, look, we are an asset management business. Also, we have stores. But this is the main thing we're doing, right? And they are distinct, right? Love that. We like that we have cash. We do not limit to specific industries. So we're not only going to do retail, we might do whatever we want to do. Transformational acquisitions. You got to like that. Let's see. That's cool. Just got an encouraging text. We are optimizing, aka cost cutting, on our retail business. Wonderful. Speed and convenience. Great. We like our store network. So maybe they won't get to 1,000 stores. Maybe they actually are just about happy with their US store count, which would be pretty exciting from the SG&A perspective, right? I was talking about how much of this is related to costs that they have to incur to cut the stores, right? What from the 740, how much of that was paying to close stores? If they're already done closing US stores, if they actually like having a dense store network, they want to be dense so that they can be convenient and offer speed. So they're not going to want to get down to 500 stores in the US. That's not going to be dense. That's like the same number of Whole Foods. Whole Foods is not dense. So if they're already down to 1,200 or 1,500 US stores, that might be where they want to be. And then they might just sell Australia this year, sell France, sell Australia. We're already done closing US stores. And then boom, then we're printing. Then we're printing money. Money. And you're done with the top line stuff, right? All of our year over year top line comps would be wrecked for 2026 because you're basing it off of a way smaller footprint. But the margins, the profitability, the SG&A, and the sales per store would all be astronomical year over year comps. And then potentially growing from there as GameStop improves its business. So, I mean, it's pretty exciting. We have focused on eliminating non-income generating spend. Great. Look at this. Look at this. Let's go. Let's go. I'm just getting back to the chat. Jeremy got a text from Ryan Cohen confirmed. Let's go. Larry Chang be texting our boy. Be like, mic drop. No insider text, no insider knowledge. Look at this, though. The company has signed an agreement related to a potential sale of its operations in France to a strategic buyer. They've got the buyer for France. That's huge. That's huge. I've been bothered that they still have France because it ruins all the metrics in terms of efficiency. It looks like France is gone in the next 5 weeks. Q1, get it done. Oui, mofos, says John today. Let's go. That's awesome. And they already acknowledged another asset impairment in Q4. So perhaps they don't have too much asset impairment left to go. But it's smart for them to sell it in Q1 because Q1 of last year, there was a $35 million asset impairment related to France. So they get to They get to stack that with the year-over-year comp numbers as far as net income growth, etc., rather than doing it during Q4 or Q2 when that would weigh on the year-over-year numbers. So smart by them, impatience by me, but great news that they have that sealed in the bag. Store fleet optimization. Let's go. 727 US stores. Oh, let's go. Let's go. Look at this. I was over here speculating, and look what comes here a few sentences later. Look at this. We do not anticipate closing a significant number of stores in fiscal 2026. Let's go. They finished. They finished, which means we're going to get to see what their SG&A really is in this coming year. Tired of all this. It's inflated because of all of our store closing costs. We are selling France. We just closed 727 stores, and we are done. We're done. We'll still close a couple here and there, right? Who cares? But like, we're done with like the real like hacking at the business. They like the profitability that US is. They like the footprint that they have as a retailer. They have the right number of stores in the US. That is such good freaking news. The only question is, do they keep Australia? I want them to sell Australia, and they might be able to sell Australia for a tiny profit. Like Australia actually makes money. So if they want to keep it, I guess that's a good sign too. But to think of them being done, they're done with the US store closure, it really means cash cow season is here. It's cash cow season. Here's a forward-looking statement on acquisitions. While the company has no binding agreements, so do they have some under-the-table agreements, right? No binding agreements for a specific transaction at this time. We are actively evaluating opportunities that could require significant capital deployment. Shareholders should understand that our strategy is now explicitly focused on leveraging our cash, flexible capital structure, aka convertibles, and stock to acquire assets that we believe will undergo a significant re-rating under our stewardship. Re-rating is akin to what we've been talking about here, repricing, right? When is the fundamental repricing of GameStop's stock going to catalyze? And they're saying it's going to happen through acquisition, and we are going to use cash. We are going to use debt, and we are going to use dilution. It will be all three. Y'all got that? Cash, debt, dilution. All three to acquire something significant that ultimately they believe will cause the combined entity, the diluted GME entity conglomerate, the holding company, will undergo a re-rating, a repricing, and not a small one, a significant one. And repricing is nice because it's not just, what GameStop is saying is that the sum will be great. The whole will be greater than the sum of its parts. What GameStop is saying is when they make an acquisition, it's, first of all, it's not going to be for a freaking $2 or $4 or $5 billion company. Like, there's just no way they're like, we need to use a ton of our cash and a ton of debt and our stock to get all the way up to this $5 billion market cap. There's no way. that it's just a $5 billion company. They're talking about a bigger company. Maybe, just maybe, they're talking about freaking Target. Okay, but I don't know if they are or not. Let's not get too sidetracked. The point is, though, when they do this, they are not thinking, oh, great, we bought a company that's worth 20 billion. We're worth 10 billion. Together, we'll be worth 30 billion. They're saying, no, if you, on the other side of this acquisition, on day one, we will be worth 20+% more than the parts. If it's a 10 and a 20 put together, now it's going at 40. Asking price right now is 45.50. Like, it just, on the jump, there's a re-rating. That's what re-rating means. They're not talking about we're going to buy something significant and then we believe that over the next 5 years we will execute and then we will generate more earnings and then we will be able to create something worth a lot more. Like, they're saying from day one, it will be priced differently. Our holding company will be priced differently. Jet Geek says, look at Target after hours. Is Target doing something? If it's actually Target, I swear. Okay. A little bit of something after hours. I'm not saying it's not Target. You know, plenty of trolls in my comments think there's no way it's Target. I don't think, one of them said they'll buy me a steak dinner, but I don't know if I want to go out to dinner with them. I might just tell them to send me Omaha steaks. Anyways, this is huge, guys. This statement is huge. This re-rating phrase is huge. That is your, and so anyways, the re-rating is confirmation that it's not just over time through execution that GameStop will undergo price appreciation, but it will be at the time of acquisition, right? As analysts digest the holding company, they will value it differently in a good way. That is huge. And then this is huge, right? It's cash and debt and dilution, all of the above, which means it's stinking big. They're buying something big. They have 8 billion in cash ready. Like, if they kept 2 billion as insurance, they could spend 8 billion right now. They could spend 8 billion on a company right now. So why would they say we're going to use our cash and flexible capital, aka convertibles, debt, right? And our stock, aka dilution. We're going to sell into it. We're going to raise funds through our stock. We're going to raise funds through bonds. We're going to use our 8 billion cash to get something that's worth 4 billion. No way. They're buying something at least 10 billion plus in market cap. At least. I mean, that's stinking epic. Here we go. Reportable segments. We know about your segments. Let's go. Let's go. Look at this. New Zealand's closed. Goodbye, New Zealand. Goodbye, New Zealand. That was the fourth quarter of 2025. That's what the asset impairment was. That's what the freaking $10 million of asset impairment was. New Zealand. Gone. Boom. Oh, Benji says he'll super chat me a steak dinner if Target's the acquisition target. Thanks, Benji. I appreciate it. I do like steak, just so all y'all know. Just so all y'all know. But if you super chat it, you know what I'm going to do with it. I'm going to buy some of these shares and then I'm going to DRS book them. But I will still appreciate it. And one day that will be a steak dinner for my children's children or something like that. Maybe I'll start a family foundation that buys steak dinners for people. That would be cool. That'd be cool. And they closed New Zealand. Benji said, not a bet against you. I just think it'd be crazy cool if you were right. It would be crazy cool. I mean, to pick literally one company when Michael Burry's throwing 15 out there and everyone else has got another 30. And then a bunch of other people are like, we don't know. It could be anything. I'm like, okay, well, that's not an opinion. So New Zealand is closed. So earlier in this stream, I was saying, man, I just want them to close Australia. What do we think? Are they going to keep it? Are they going to, or not? What do we think? I think this is a sign that they're going to get rid of it. Some Grady says, in a weird twist of events, Jeremy starts a GME steakhouse. That would be awesome. What's up? 500 of you guys. Hey, drop a like. I'm batting 200 again. I'm not trying to stay in the minor leagues forever. And subscribe if you want to join the chat. It's very easy to do. I think. So maybe they will close Australia or like sell Australia. And look at this. Our sales and profits. Okay, yes, we know that. Look at this. Boom. 2,200 stores, 1,600 in the US that they like. 1,600 good stores in the US. Let's go. I thought they might want to get down to 1,000. I thought they wanted to get down to about 1,000 in the US. I thought 1,500 was possible. What's up, Montal? Man, Dr. Geppetto. Let's go. 1,600 in the US. 300 of these are France and is going away. And then they have 300 in Australia that may or may not be going away. 206 stores. Oh, what is up? TCM King 575 with the 5. $5 super chat. It says thanks for the coverage. Thank you, TCM King. I'm gonna like your. Oh, it doesn't let me like it. Oh, look, I can reply. Thank you. Thank you. Boom. Cool. Johnny says thanks for all you do. Thank you. Chubwa, let's go. Chubwa says, he says, dang, 500 viewers. I remember being one of only 10 to 20 viewers on your first live stream. Thanks, Chubwa. Yeah, I mean, everyone wants to know about the earnings, right? If you're invested in GME or if you're short GME, honestly, like you should know what's going on with the company. So no better channel to know what's going on from just a level-headed fundamental analysis perspective, in my opinion. 2,206 stores currently. I thought they'd be down to 2,154. I mean, come on. 2,206 minus 2,154. I was 52 stores off. 2%. I was freaking 2% off. What's up? What is up? Let's go. Let's go. Let's go. 2% off on stores was my estimate. That's pretty awesome. I'm just saying. And 300 of those are going away. And we'll see about this other 300. We'll see. Okay. Yep, we know about this. Store locations, we know about this. Let's see. We got some states. Yep. France, Australia. Boom. France is going away. They got the buyer signed. They've signed the deal with the buyer. And they've already closed New Zealand. So now it's just Australia. Pretty stinking awesome. Trade in about that. Very competitive. We know about that. Seasonality. We hella know about that. Oh, check this out. Do they say this year over year? Did they say that last year? What's their last 10K? employee, full-time. Let's see. Boom. So last year, a year ago, they had 6,000 full-time employees and between 10 and 13,000 part-time employees. This year, they have 4,000 full-time employees and between 11 and 16 part-time. Wow. So they have 50% fewer full-time salaried and hourly. And half of those, right, about 1,000, they just switched to part-time. And then some of the part-timers, they probably switched to part-time, right? They probably had some people doing, 30 hours that now they're only doing 20 hours so that they can pay them a little less or something like that. So they actually have more part-time employees, which probably, despite having fewer stores, so maybe they're actually staffing stores a little bit more per store, giving stores more help, but paying fewer people the big dollars. You got to love that strategy. We got a super. Roder Burgess, €2 or dollars, or that's probably euros, huh? Thank you. Thank you so much for the super. I appreciate it a bunch. Not ever required around here. No secret societies. Let's go. Let's go, Burgess. But always appreciated. Always appreciated. As the subs are as well. Thanks, guys, for the couple extra subs. Channel members, all of the above is always appreciated, never required. So the stock is acting like it's sad, but the company is looking so good. Looking so good. Jonathan Pickett says, not a fan of having more part-time employees than full-time employees. The thing is, a lot of these salaried full-timers, like a lot of this is the corporate office. There's not that many of this 4,000. A good chunk of that, well, let me put it this way. Of this 6,000, a lot of that cut is letting go of some of the corporate staff that they're not actually replacing. And they're replacing the productivity with tech and with the other people that they're keeping becoming more productive. The reason I like more part-timers is because I would rather have 2 people working in a store than 1 person working in a store. Like the store experience as a customer, the safety for the employees, it's better with 2 instead of 1. Also, even more importantly, I want to have people that are available if someone is sick to cover. If someone wants to go on vacation, to cover. Like I would want each store to have more people employed by the store, even if they're technically part-time, so that if there happens to be a week where they have to work full-time, you can get paid a time and a half or whatever, and the store can better service its own needs because it has a larger employee footprint to share the load with, rather than 1 person having to like put the whole store on its back and live and breathe this 1 store location. That's why I like it. It also probably saves GameStop money. But over time, as the store count continues to optimize and the profitability continues to go up and to the right, hopefully these people are getting paid better and better and have more and more compelling benefits, which they're, trying to advertise here. I'm not sure if it's really competitive yet, but hopefully GameStop can get there as far as the desirability of GameStop as a workplace. Justin K says, my question was for you, Jeremy. Please and thank you. He asked a question. Oh, here's the question that he asked. Do you see a downside of this idea? Buy back 59 million shares at these pin prices and then warrants get executed? 590 million cash with 0 dilution? No, I think share buybacks are super viable and an exciting potential. I don't think they're going to do it right now because I think GameStop thinks what's even more exciting than share buybacks is their acquisition. So that's why they wouldn't do it yet, is if they want to keep all that capital for a massive acquisition. But I do like the thought of share buyback. Like if GameStop wasn't about to acquire a huge company, then yeah, just borrow convertibles, at 7 years out, issue warrants at 1 year out, leg all the cash from the convertibles into your own stock, print on the warrants. Like it's like an infinity money hack. I like that thought, but GameStop has bigger fish that they're going after right now. And you can't really blame the company for doing that. Ultimately, it's a bigger impact that they're trying to have. Let's see, risk factors. These are all probably. This one is probably new though. Evaluating and executing on acquisitions. Did they say that last year? No. Okay, so we will read that one faux show. First, super chat from Peter. What's up? Hey, thank you. Thank you, Peter. Peter with the super says, thanks for the analysis. I appreciate it. Solid Squeeze says, hey, fella. What's up, Solid Squeeze? What's up, Flex? Hey, thank you, just in case. Some grade says, it'd be weird to do share buybacks when they just issued shares at these average prices last year, right? It's a good question. So their at the money offering was just over a year ago. It was almost 2 years ago, actually. It was the beginning of 2024. And then last year, these were convertibles. The thing is, even though our price, like the price of GameStop is about the same as it was then, the value of the company is much higher. Like the strength of the company is much higher. The cash flow is much higher. The profitability is much higher. So to buy GameStop at $24 a share 2 years ago, you were paying like overvalue, right? From a fundamentals perspective. But to buy GameStop at $24 a share at the beginning of 2026 is like a gold mine. It's like robbery. It's deeply undervalued because of how much the company has progressed over the past 2 years. So it would look a little funny from an optics perspective, but to say, hey, we sold these and raised $24 2 years ago, and now we can buy them back 2 years later without losing anything from a time value money perspective. Like we can buy them for the same price 2 years later. That would actually be pretty bullish from a financing perspective if they were able to pull that off. I did, Solid Squeeze, talk about the wording about rewriting the value, re-rating the value under their stewardship. I talked about that. It's a huge takeaway from this 10K. Super, super exciting. Just in case says also they sold it closer to $40 a share last time. So Marvin the Martian, what's up? Glad you're here. Jay Card. Shareholder vote pushed back to June, apparently. Okay. Is that I haven't seen that yet. I haven't gotten to that if it's on the 10K. Is that on the 10K? Or no? Solid Squeeze. Let's see. That would make sense for them to do it in June because they're already doing a vote. Like that's when the annual shareholder meeting is. They're already voting on all these other things. So then instead of sending investors 2 different things, they're saying, hey, here's the one thing that we're going to send investors. And here's all the things we're voting on. Check yes or no, yada, yada. Comp plan being one of those things. So if it is in June, that makes sense. And from a timeline perspective, does that mean we do or don't see an acquisition announcement between now and June? It's like, I don't know, 3 months it'd be a sad 3 months if we just have to wait 3 months. It wouldn't be that sad, but because there's a lot more to dive into from the 10K compared to 10Qs, but it'd be pretty epic if GameStop, Power Packs, GameStop comp plan, GameStop acquisition announcement, and GameStop Q1 numbers, and GameStop selling France all happen in the same week, or at the very least in the same month, like that would be pretty wild. So they might just be teeing up June to be like blast off, or they could try to space those things out. Just in case, re-rating, I talked about it earlier. I think you were here. Basically, it just means repricing. Like it will draw analysts to the company, to the holding company, that will, under GameStop's best projection, like in GameStop's mind, they're like, anyone would look at this conglomerate and say it's worth at least this. And this would be much higher than what these companies are trading at independently. So it would be like, it's basically saying, like, by acquiring this company, we will create instant value. Like our stock will instantly go up by a meaningful percentage, like 20+% up just on the news. Re-rating being differentiated from like long-term execution, right, and outperformance that way, which obviously that's the most important thing long-term. But it'd be a bummer if short-term, like some people have speculated, oh, once GameStop acquires something, don't you know the stock's just going to go down 20%? Because that's what always happens when a company acquires a company. And GameStop saying, like, that's not going to happen. Like when we buy what we're going to buy at the price we're going to buy it and create what we're going to create as a conglomerate, like this thing is going to be worth much more than what we're paying for it because of the synergy and the re-rating that's going to occur. It's not really quite like forward guidance though. Let's see what they say about their acquisition. Part of our corporate growth strategy is to seek out, review, and consider potential acquisitions and other control transactions, some of which may be significant in size, some of which, aka they're definitely reviewing more than one. There can be no assurances, however, that we will be able to identify suitable candidates, negotiate, or otherwise come to an agreement for any such transaction on terms acceptable to the company, or that we'll be able to obtain financing for it, or that we won't be screwed by the government through antitrust laws, etc., or that we'll be able to successfully integrate any acquired businesses or realize any anticipated synergies or other benefits therefrom, or that the financial performance of any such acquired businesses will be consistent with the company's expectations. So this is an interesting phrase here, which I'll get back to in a second. Acquisitions and other control transactions involve significant risks, difficulties in the integration of operations, systems, and personnel, and the diversion of management's attention from other business concerns. Although our management will endeavor to evaluate the risks, there are no assurances that we will properly ascertain all such risks. Acquisitions may involve significant cash expenditures, debt incurrences, equity issuances, and expenses. Y'all see this? Why'd they phrase it so funny earlier when I told y'all this means debt, this means raising equity, and over here they're like just saying it, cash, debt, equity. Difficulties could have an adverse effect. So this is interesting. Integration, right? That's a risk. They might not be able to acquire a business. Some people might read into that line and say, oh, see there, they're going to buy a company that integrates GameStop on the consumer end, right? They're going to buy Funko, or they're going to buy PSA, or they're going to buy eBay, right? Something that goes well to me so that they can have synergy on the consumer end. And I would personally not read into that if I were you. I would assume that what they're really talking about is, and they actually lay it out for you right here, the integration of the operations, systems, and personnel. In other words, like, to put it in the financial terms, it's the integration of the SG&A. It's not the integration of the consumer experience, like the company at the ground level. It's the integration of executives and corporate staff, and what Gmail, like what email provider you use, what data storage do you use. Like, it's all of that type of synergy and integration, in my opinion, that they're primarily talking about there. So June 8th apparently is the date for the vote, which you would assume is also the date for the annual shareholder meeting. Probably. Okay, here's the more risks. All of these I have seen before. If Pokemon gets less popular, did they say this last time? Pokemon. Okay, so this is another new one. Pokemon gets a specific shout out in GameStop's risk factors. Let's go. A significant portion of revenue and profit in our collectibles product category is generated from the sale of trading cards, including Pokemon trading cards. A decline in the popularity of these collectibles could adversely impact our operating income. They are making bank on Pokemon. Let's go. They're making so much money on Pokemon this year compared to last year that they needed to include Pokemon as its own risk factor to the business. That is awesome. That is awesome. I mean, that's how you know. That is how you know. Holy smokes. What else we got? What else we got? How's the stock doing? It's getting some 22.5. I mean, that's kind of like, whatever. We were at 22 yesterday. So is that really getting slammed? Year to date, up 11%. The market's down 5% year to date. Like, is that, I don't know. If this is getting slammed, they're not doing a good job. That's for sure. What's the market year to date? Down 4%, up 11%, doing just fine. Yeah, that warrant pop lived. I thought it probably would be, unless there was something I didn't know about, right? That I would find over the next minutes and hours, But so far, there's nothing in here that to me is like, instantly the stock should be 20% higher. But it is like, this is good. Huge. So far on this, like, what they have said about the acquisition being like causing a re-rating is huge. That they are actively in talks. Of course, we already knew that, but that they're planning on using cash, debt, and equity, like, gives us more confirmation, not just from a CNBC interview, right? Not just on Wall Street Journal. This is an SEC filing saying that we are looking at a significant size acquisition and investing a significant amount of cash and debt and equity dilution. So very substantial confirmation and evidence that an acquisition is going to be massive in size. Jonathan Pickett says, where did they state that the vote would be on June 8th? Thank you for the super, Jonathan Pickett. Some people have said that in the comments. I have not come across that personally. June, let's see. June. Here we go. It's at the very, very bottom. The information not otherwise provided will be set forth. Oh, our annual shareholder meeting is on June 8th. This definitive proxy statement relates to a meeting of stockholders involving the election of directors and the portions therein, therefrom required to be set forth in this form. Okay, so there's one reference to June 8th. Confirmation that is the annual shareholder meeting date, which is nice. Oh, here you go. The reason it's tied is because of this star right there. Boom. Executive compensation, star. June 8th. Right? So all these things, star, star, star. Here's the asterisk. Oh, sorry. Item 11, 12, 13, all be provided in the shareholder meeting. So there you go. Confirmed. It is factual. You're welcome, Jonathan Pickett. It's not just a rumor in the chat. Sometimes the chat can have some rumors. That one checks out. So the acquisition re-rating and the scale of the acquisition, super huge. These store closures on US already had, like, having closed 720 US stores, and in the whole year they closed 1,000 stores. Last year they had 3,200. Now they have 2,200. They literally closed 1,000 stores in 1 year. Again, right? They closed 966 last year. So they closed a ton of stores. There's another 300 on the chopping block with France. But most important is that the US cutting is done. The only question left is, do they cut Australia or not? They already have a buyer for France, which they announced in this 10K. The buyer for France is lined up. The store closures in the US is already done, which means that the cash cow season is here for GameStop's retail operation. That is massive, massive, massive. What else are we going to learn here? Operational risks. Okay, we love the risks. Also, Pokemon. We got a confirmation that Pokemon is indeed absolutely destroying as it relates to the collectibles business. That this year, right? Last year was 18% of sales. This year is 29% of sales. Absolutely crazy. The numbers that collectibles is doing, and Pokemon is a huge portion of that, and that does not even include power packs. Crazy. We should get that confirmation here in a minute as well, as far as the materiality statement. So many risks. Common stock. This isn't new. They talk about short squeezes. Do they? No, it's all the same. Oh, here we go. CEO Performance Award will result in dilution. Thanks. We did know that. Of course, he has to achieve the tranches. But assuming that he does and exercise them, it will create dilution. Anything else they say here? So there are required holding periods for the stock that he is awarded. So that's nice. Cohen would also have a huge control in the company, obviously. Basically, you're not only exposed to the dilution risk, you're also exposed to Cohen risk. Like he will be the lord of GameStop if he accomplishes the tranches, which involve a $100 billion market cap. So, he's earned the right to be lord of the company at that point, I suppose. What else do we got? We got convertibles. We know about that. We know all about that. Warrants. Future warrants. Hey. Did they say that last year? Warranties? Nope. 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 No. Okay, so this is also new. A bunch of risks related to the warrants. This is fun. We didn't have this before. If you're here learning something, drop a like. And thanks for being here also. 13% dilution from the 59 million represented, which could cause the stock to go down upon that dilution, right? If dilution's not already being priced in, then post warrant expiry, that could cause potentially a 13% decline in the stock price after the warrants are exercised. Obviously, right now that wouldn't happen, because if warrants are exercised right now, GameStop's trading at 22 and the warrants can only be exercised at 32. So that would it'd be helpful for GameStop if people exercise right now. Future issuance of additional warrants may adversely affect the market price of the warrants and the market price of our common stock. So without consent, we may issue additional warrants with the same terms as those distributed on October 7th, 2025. And additional warrants will be considered part of the same series of, or rank equally with all other warrants issued under the warrant agreement. We may issue such additional warrants through a sale or another distribution to our holders of our common stock and convertibles. The issuance, sale, or distribution of substantial amounts of such warrants could adversely affect the trading price. That's interesting. So they're like, we can do more of these, just so you know. It's very interesting. They also confirm that holders of the warrants likely hedge their warrants with short exposure to neutral out the impact of holding the warrants. So GameStop is acknowledging that the stock might be getting pinned in part because of the warrants. Very interesting. Exercising the warrants is risky, aka owning GME shares is risky, just like all investments are risky. The warrants do not exercise. Oh my gosh, this is crazy. Any warrant you do not exercise prior to the expiration date will lose all financial. If you do not exercise these, y'all need to cover your buns, okay? Even if they're above the strike, you have to exercise them or sell them. Okay? They literally just go away if you don't. That's crazy, in my opinion. But don't let it happen to you. All right? Warrants are not entitled to any of the benefits. Not until after they exercise, of course. Okay, we got cybersecurity. Yep. Here you go. Leases set to expire in 2026 is 1,100 of them. So this is awesome. We had, here's what last year was. So the future expiring leases in 2026 increased by about 400, which means some of the 1,700 that were set to expire last year, some of those were Canada, which is gone now. Some of all these were Canada. Some of those are US stores that have closed. Some of those might have been renewed for 1 year renewals rather than locking them up longer term. Perhaps GameStop thinks that rates for commercial property are going to come down. And so GameStop's saying, hey, if the market's about to poop out, right? If this thing's going down, just give me a 1 year rental, 1 year extension, and I bet I can lock up a 5 year once the rent rates are as low as I want them to be. So 2029 plus had 127, now 160, right? So only about 140 stores were extended 5+ years. Some of those might have been even new stores they opened potentially, but anyway, some interesting stuff related to store closures. 243, yeah, 220. So 2028 is basically unchanged. They went from 261 store leases expiring in 2028 to 243. Basically, that is probably just Canada. They probably didn't close any 3 years early. They might have, but it's probably just Canada that they sold. And 2027 went up by a couple hundred as well. So a few hundred of these rolled into 1 year and 2 year. About for the leases that expired in 2025, 80% of them they just extended 1 or 2 years, and only 20% of them they extended 5+ years. And that's of the stores that they kept. But obviously they shed 2/3 of them. Like they shed 1,000 stores year over year. That's just so awesome. So awesome. Distribution facilities. Here we go. Stock chart. There's Jimmy. Help us out, RC. Look at your chart, bro. It's embarrassing. Here's Jimmy for 5 years. Here's the market for 5 years. Come on, Jimmy. It's time. This is the year, baby. Let's go. Let's go. Pretty resilient, honestly. Man, what are the odds that they drop an acquisition something after hours tomorrow? All they said is it's not a binding agreement. They said they're not in a binding agreement yet. Right? That's all they said. They're not yet in a binding agreement. Look at that. We have no binding agreements. That's just like, man, what do y'all think? Am I reading too much into that? Because if you're buying a house, like you can put in your offer and the offer can be accepted. So like you're buying the house, right? But you have like 8 days or whatever, 7 days to back out. So you already have the agreement. but it's not binding yet. But if you have a friend that's ever bought a house or if you ever bought a house and you put in an offer and the offer gets accepted, what do you say? What do you feel? Oh, we have no binding agreements. Oh, it's not binding. We don't have any binding agreement. No, what you say is they accepted my offer, right? Like we got it. We got the house. Right now we just got to check out inspection, make sure we still want it, yada yada. But like we got the house. So is it possible that GameStop already has the acquisition? They already have the agreement, and the only thing that's left is to basically sign it or like announce it, right? Like it's already done, but they're just in a back out window period. They're in a cold feet period, right? What are the odds that GameStop's already in the agreement, but it's technically in a back out window? And if so, do we get a announcement at any point, right? After hours tomorrow or any point between now and June? It's very interesting to think about. Zigzag, I'm still going through the earnings. So I don't know how to help you. This is not short form, go through the earnings. This is long form. But if you want to check out another video, maybe I make tomorrow or the next day on like, hey, is it bullish or bearish? Kind of big takeaways. Then you can watch that as well. But right now we're kind of going through it. Chuck Taylor says, I think they have to wait 90 days after Ryan Cohen's purchase to announce. So yeah, there's the whole like known information, whatever. Like I think he just couldn't buy in January if that agreement was already in place. But we're already almost 90 days away from that. You know what I mean? Like we're 80 days, 70 days away from his January buy. And if they didn't even have the agreement even drafted, like if they hadn't started the conversation to a formal level by January, like I don't think they would have to wait longer just because he bought the stock in January if the talks didn't exist in January. If the talks already existed and announcements were going to come within a certain window, then I think it'd be riskier. But yeah, more likely, I still think probably, I don't know, like I still kind of think they want to get that vote in first. Here's his comp plan. 20 billion with 2 billion in EBITDA. I just don't think he wants the vote to happen if tranche 1 has already been accomplished. That's the main thing. Could we be at $30 a share? That's comfy, right? If they announce an acquisition and GameStop pops to $30 a share, or call it $35 a share, right? A 50% bump. 50%, if GameStop's 50% higher than it is now, it is still well below the first market cap hurdle. And obviously would still be well below the EBITDA hurdle. So, you know, I kind of think that an announcement before June is very, very, very possible. I don't think they will wait until the vote for just because, like, they have a lot of runway. They have a lot of runway. So could an acquisition announcement come between today and June 6th? Which, how much time is between today and June 6th? How many weeks are we talking about here? We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We got 10 weeks, or you could call it 11. It's really closer to 11. Just 11 weeks until the vote. Most likely, probably, is they let this keep bleeding and deploy some capital in late June or July after a vote goes through. Like, I still think that would probably be my betting favorite. But before we knew the vote was going to happen in June, I would have said like 80% chance that we do the comp vote before the acquisition announcement. And now that we know that the comp vote's not going to happen until June, I'm like more like 60-40, 55-45. Like, I think there's a huge chance that they do announce something related to acquisition before the vote, that they let that be some momentum going into the vote. If we trade sideways for another 3 months and we start this whole year just sideways, right? Tiny little recovery in January and then sideways for 5 months. Is that the vibe that Cohen wants heading into his compensation vote? I don't think so. I think he needs to see some price action heading into his vote. He doesn't need to. He'll probably get approved either way, but he'd probably want to. So if GameStop's not at least at 25, if not 28 or 30, 32, kind of pushing that warrant threshold, I don't think they get on the other side of 32 pre-compensation plan, because I don't think they want to trigger convertibles and warrants, and those things could trigger S&P 500 tranches, and now all of a sudden you're putting yourself at risk where you're voting on a compensation that's already partially been achieved, and I just think that's a bad look. But if GameStop's at 28, and the reason they would get from 22 to 28 could be just related to how like people price the earnings. It's possible, but it might be like, hey, here's an acquisition announcement. Boom, some hype in the stock, and now we're bouncing between 28 and 32, getting rejected at 32, but supported at 25, and we're kind of in this slightly higher threshold. I think ideally that's probably what they would want the stock to do. Do they need an announcement in order to get the stock to behave that way, or is that just going to be the inevitability of what happens over the coming months either anyway? I don't know, but I would give it like a 45% chance that over the next 11 weeks, we do see some type of acquisition announcement. I don't know. Potentially as soon as tomorrow after hours. All we know is that they're not in any binding agreements, right? It doesn't mean they're not in an agreement. Like, why would you say binding? Why would they say binding right there? Why wouldn't you just say no agreements? Right? No binding agreements? So what kind of agreements do you have then? That's unique language to me. All right, let's keep going. 2025, we drove our strategy through the following initiatives. We expanded our collectibles business, going from 19 to 29% of total sales. This growth was driven in part by the rollout of our graded trading card submission services, expanded store space dedicated to collectibles, the continued development of our first-party repack offerings, and other strategic initiatives. First-party repack offerings. What does that mean? What does that mean, guys? Help me out. What's up? What's up, TH Rare? The rare. Hey, thanks for the sub. Becca Cat thinks first party repack offerings means power packs. They do have power packs in store, right? The in-store physical power packs, which I have thought those almost certainly are a part of GameStop's numbers. Is there anything else GameStop? Yeah. Paintball also thinks it's physical power packs. I think so too. Series 1 and 2. Physical. So it probably is related to GameStop exclusive Pokemon. Is any of this like repack? None of this, like when they do a like this thing, it's GameStop exclusive, or this isn't actually GameStop exclusive, but like when they have an in-store event for a GameStop exclusive Pokemon, that wouldn't be a repack, right? Or if they say, like if they sell, instead of selling a box, they sell individual packages, or they increase the price for a packet, like none of that's wouldn't be repacked, right? It's got to be physical power packs. First party repack. Right? Thanks, Herman. See ya. To me, this is physical power packs. I don't think this is digital power packs. I still do not think digital power packs is included in GameStop's collectibles based on this statement, because they are not repacked. Digital power packs are not repacked. It's also, digital power packs are also like, I don't know if you would even consider them first party. Some Grady says, are repacks like bundled packs? Like 5 booster sets sold in a box? That's another, so that's what I needed, Some Grady. That's the intel I needed, bro. Thank you for your dome. If they bought things as singles and sell them as a pack, that would also be a repack. I love that. So of course it's possible, right? It's still possible that digital power packs is included in the collectibles, but I do not think it is. And this to me does not mean that it is. Physical power packs and potentially singles being sold as packs is what this means to me. Okay, continuing on their strategy. We raised 4.2 billion convertibles. We got a bunch of interest income. Way to go. Cutting costs. Divested Canada. Shut down New Zealand. Love this. Love this so much. One of the best things from this whole 10K. New initiatives. In 2025, the company launched Power Packs. Okay. So, all right, let me finish this. And then I'll say my thoughts. A new digital trading platform in partnership with Collectors Holdings, Inc. through its PSA division. Early beta results have been promising. Let's go. They didn't say that last time. Power Packs is an online e-commerce experience through which collectors purchase graded PSA trading cards that are stored in the PSA vault. They can be sold back, traded, shipped, or held. This is awesome. Okay. Here's the thing, guys. A little feather in the cap moment here. New initiatives. Is a bullet point under growth of collectibles, or is it a separate bullet point in addition to collectibles? It's not a trick question. What do you think? What do you think? Why would you list it separate if it was actually together? Okay, the growth in collectibles. Right here. Boom. Does it include physical power packs? Sure. Does it include digital power packs that's in beta, that's online, recently sold back? No. It's separate. Love it. This just in the chat, Roaring Kitty's birthday is also June 8th, the day of the annual shareholder meeting. That's fun. That's fun. Okay, so my speculation, my analysis that digital power packs is separate, still coming in very nicely. There you go. There's the store. So they did close 75 of their Australia stores and only 3 of their French stores. This makes me think they're going to keep Australia. They even opened one. Look at that. You don't open one if you're going to sell it, right? I think they want to keep Australia. You don't open a new store if you're going to keep it. You also don't close the stores if you're going to sell it. Look, Europe, they only closed 3, probably just because the leases expired and they had to. But everything else they're keeping together so they can sell it and let the other person deal with it. Australia, it looks like they are retrofitting just as aggressively almost as the US. The US closed about, what's that, 30% of their stores? 727 divided by 2325, 31%. Australia closed 20% of their stores and opened one. So I'm starting to think they're going to keep Australia, which means that Australia might start carrying some more weight. It is worth mentioning in Ryan Cohen's letter to the board. Is this it? Check out what gets a shout out in their letter to the board. So, hey, streamline or sell. Here's our suggestions, right, of what GameStop should do. One of them is to sell stores. But what they say is the Australian market has shown signs of life, but it's not big enough to offset the other Europe stores, right? So from the beginning, this is from November of 2020, literally from November of 2020, Ryan Cohen said, hey, GameStop, you got to close all of your international stuff, but maybe you should keep Australia and just close everything else. From the jump, that's been his position. And it looks to me like that is how they are operating, which means their go forward store count globally would be something like 1,900. Obviously, they'll still close some stores, but then they'll also start opening some. It's pretty cool. Anyone here learning anything? What's up? This is fun stuff, guys. This is the big leagues right here. What else are we going to learn? Okay, there's our gross profit number. 33% margins. Woo! 33%. And I thought it was going to be 30.5. Some of that's related to hardware being the biggest decline. So let me actually adjust for that. Let me adjust for that real quick. Hardware. Show me the hardware number again. Not for full year, but just for the quarter. Oh, come on. Show it to me here then. There's that. Here's this. Hardware for the quarter is where? Here we go. 535.6. $203.7 and 365 gives me that. Okay, so I still would have been, yeah, even when you adjust, I still end up with a 30.54 gross margin. Yeah. So their margins, sorry for the rabbit trail there. Their margins genuinely crushed. I mean, that's crazy. 33% margins. Love it. SG&A as a percent of sales down to 25.1%, which is very nice. Oh, this is for full year. Okay, yeah. Oh, this is for full year. Golly. This is for full year. Okay. There's Australia. There you go. 12% of sales is going away. So be prepared for that on top line estimates, all my brethren. Based all of the improvement in margin is related to collectibles. So that's important when you think about modeling the company. Like when you think about margins improving, what they're saying is it's not like we are selling games for better margins. We're not selling hardware for better margins. Like our margin percentage on our line items is pretty much the same. We're just selling more collectibles as a percentage of our sales. And this number being a higher percent of sales is the reason why this number is growing. Y'all tracking with that? That's pretty much what they're saying right there. Let's go, Miller. Let's go, GME. Let's go. A very mute reaction to earnings, which is kind of welcome, right? Enough of the violent up and violent down. Like let's just keep ticking up. Up 11% year to date. Let's just keep ticking up. Oh, where am I? I want to be here. SG&A, another 20% decline in SG&A. Beautiful. Primarily related to divestitures and store closures. So it's not like the cost of operating is any lower. It's just that they are operating fewer things. Oh, let's go. So 30 million of asset impairment, has already been recorded related to France. So the year over year, like how much does selling France hurt the year over year comp numbers? Because asset impairments, well, guess what? This 50 million, 30 of that was France already. So they've already been adjusting asset values down for France throughout the year, which means there's probably not that much left, I would think. It's not like they've just been waiting until the sale. Guppy forever. What's up? What's up, man? You're missing some good stuff, some good numbers. Interest income increased. The loss. Bitcoin pledged as collateral in our covered call strategy. Derecognition of our digital assets. Does that mean they stopped doing that? And a 0.1 remeasurement. Wow. So that's why the Bitcoin loss was less than I expected. That's actually cool. How much did that save them? Show me digital. Oh, where is it? Where is it? Loss on digital. They lost. That's for the full year. Show me the 13 weeks. They lost 151 million on Bitcoin during Q4. They should have lost. I'll show it to you. They should have lost. Sorry for the fast scrolling. 163 million. They should have lost 163. They only lost 151. That means they made $12 million on covered calls, selling call options against their Bitcoin. That's awesome. It also means that if Bitcoin goes to the moon, GameStop is capping their upside, which means they truly are using their Bitcoin as a hedge against inflation. They are not using their Bitcoin. Like Cohen's not like a genuine bull on Bitcoin. He's just like, look, this might perform better than our cash. And it might, right? It didn't in Q4, but this loss, that 163 is an unrealized loss, but the 13 million is a real gain. 13 million divided by 519. 13 divided by 519 is a 2.5% gain. So they're making 2.5% interest on their Bitcoin through covered calls, which means they're selling pretty far out of the money covered calls. But still, I mean, they would make 2.5% plus accumulation, and it doesn't. And again, it sounds like they're probably putting their covered calls at decently far out of the money, which means they would be able to pocket that 2.5% and appreciation on Bitcoin, assuming that it doesn't go absolutely bonanzas. So that's great. Pretty exciting stuff. Income tax benefit, $40 million improvement, negative 9%. That's awesome. This change in income tax expense and the effective tax rate was primarily driven by section 141.1. Oh, sorry. By the $141 million release of valuation allowance on certain U.S. deferred tax assets. Note 15. Note 15. What's note 15? Federal. That's really not actually that informative. Oh, there you go. It's foreign. That's for the full year. Yeah, for the full year. So it's just like income. It's just related to the benefit of owning an unprofitable France, unprofitable Canada, and selling for a loss. So it is generally one time in nature. You're not going to have that $50 million swing in future years necessarily, right? From income tax. But nice to see a little bit of tax benefit to offset the, there you go, $51 million just in this quarter of tax benefit, which is almost the same amount as their asset impairments, right? For the full year, their asset impairments were $53.8 million. And in Q4, their income tax benefit was $51 million. So that's awesome. That means if we see a big impairments in Q1 related to France's sale, it means we could also probably expect something around that amount or 90% of that amount to be an income tax benefit during Q4 of next year. It makes sense that you have to wait until the full year numbers to recognize the tax benefit because we file estimates in Q1, Q2, Q3, but it's the full year that you owe taxes on. And so that's when you recognize the benefit, right? The overpay, the taxes that France was paying, that Canada was paying, that it turns out they didn't owe because they were unprofitable. You get that money back. That's pretty nice. That's pretty nice. It does not reduce NOLs, but international tax benefits wouldn't affect. I'm not sure if those would even affect NOLs anyways, but those are operating losses. So income tax is not an operating number. Like here's operating income. We are not going to see any more NOLs. We still have a lot. GameStop still has a lot of NOLs in the bag, but you're not going to see any more new NOLs because we are operating profit. But if we were operating at a loss, then you would be able to carry that loss forward, right? You would have NOLs there, but if you're operating at a profit, then there's no net operating losses. Taxes, interest income, other income, Bitcoin gains and losses, none of those affect your operating gains or losses. Thanks for the question, Woolly Waspers. What's up, Cactus Whack? What is up? Cactus is mentioning the risk factor about GameStop pursuing acquisitions could relate to them not paying enough attention to the retail business. Yeah, I think it's cool they mentioned that as a risk, but you can see how they're paying attention to the retail business from the numbers of the retail business. Gotta love it. Yeah, so they do have a little bit more in cash plus Bitcoin than they did a year ago. Let's see. Let's try to get through this. See if we're missing anything big. And then we'll take a few more questions and hang out a little bit before we go eat dinner today. Yo, yo. Yeah, we know about this. Convertibles, warrants. We know about this. Here's cash flow. Look at that free cash flow. 1.5 billion, 600 million in operating free cash flow in 2025. You gotta love that. Love that. We got some financing going on. They're still allowed to purchase $300 million of Class A stock. Oh, but they only have 100 left. There you go. That's actually nice to know. They have $100 million more that they are allowed to use on repurchases without authorizing more, which maybe that'll be a ticket on the annual shareholder meeting this year, is to increase that authorization so that they can start taking care of business themselves. Okay. Purchase orders. Last year, they had no material off-balance sheet arrangements. This year, they have no material off-balance sheet arrangements. Okay, great. I missed that word material the first time I read that. So this also does not mean anything as it relates to digital power packs, because digital power packs is not yet material. So that is fine. What's up, Aaron? Yeah, crazy that he improved margins yet again. Honestly, so impressive. Tax stuff, market risk. Nice. There you go. More confirmation that they are writing some call options against their Bitcoin to make a little bit of money. Made themselves 12, 13 million bucks in Q4 alone. Q4 alone, right? That's what? 50 million a year that they're making off of their Bitcoin? Wait a minute. That's wild. That 2.5%, that was in a quarter. That wasn't an annualized number. That 163 that turned out to be 151, that was in one quarter. They're getting a 10% yield on their Bitcoin. Annualized. That's wild. No way. And yeah, they did it with basically all of their Bitcoin. Approximately 4709, which is approximately all of their Bitcoin. They have 4,710 Bitcoin, and they're writing cover calls against 4,709 of them. That's funny. Okay, they're saying they only made 2.3 million so far related to these covered calls. So maybe not as high as I'm estimating. The rest of the difference in the losses might be related to when they decided to close Q4, which they actually probably should say at the top, huh? Yeah, January 31st. That's what I thought. That's what I thought it would be. So that's interesting. Maybe some of it's already been. This is like the unrealized portion that they have left. Because this is like, they have multiple maturities, and some of them go as far as March, but some of them probably matured before March. So I think they made 12 million and maybe another 2.3 million. Maybe they're making even more than 10% on their Bitcoin through covered calls. That's crazy. That's crazy. I don't mind a 10% year over year yield on Bitcoin. Why don't they buy some more? Why don't they buy some? I mean, because the acquisition. We already talked about it. It's because of the acquisition. That's why. But dang, pretty awesome that they just traded 500 million of their 9.4. That they took 500 million of that and said, you know what we can do is we can just go make 10% on covered calls, and the underlying assets probably still going to go up as well. Obviously, it didn't in Q4, right? But say we can trade a 3 or a 4% yield for a 10% yield. Focus on the acquisition, of course, but I'm just saying, do that. Do that. 10% yield on 10 bill. It's 100 mil. It's pretty nice. Yeah. Audit stuff. Valuing the warrant. Okay, here we go. Deloitte and Tucci Mabucci. Deloitte and Atucci, you. Okay, here we go. Financials, we've seen all this already in the highlight. See, everyone I know that works for Deloitte, they all just say I work for Deloitte. None of them tell me I work for Deloitte and Tucci Mabucci, which is what it's really called. Yeah. This is great. Liabilities at 4.9 total. Where is that compared to last quarter? Look at that. 300 million less in liabilities quarter over quarter. Wonderful. Wonderful. And current liabilities from 932 down to 654. Woohoo! Holy smokes. Year over year, that's only $10 million less. But still, it's $10 million more efficient. That's all I know. Here we go. Stockholders' equity at 5.4 compared to 5.3. So another 100 mil in stockholders' equity, aka book value. Book value up by 100 mil in just one quarter. If you did that every quarter, you'd go up by 400 mil, which is $1 a share per year. Pretty nice. Pretty nice. I will update this stuff to be current, probably on my own time, so you have to just watch me punch in numbers. But I'm excited to kind of give you the high-level summary of their full 2025 in a video soon. Of course, you're getting it here in their actual numbers right now live. Look at that income growth. So crazy. Look at that. I thought that we would be sitting at like 370 million in net income, but we're actually at 418. Like GameStop's profitability and their margins are much higher than what I thought they would be for Q4. Okay, yeah, it's for the full year. They did not invest any more cash in the collaboration agreement. Let's see, did that non-current asset go up? This is for full year, huh? Can you show me the snapshot? This is income statement snapshot. Prepaid and other current assets is up to 34.6. And a quarter ago, it was at 34.6. So flat on other current assets. So any contribution of cards to PSA or to Power Packs was offset by other declines within their other current assets, which is basically related to cost savings in their stores. So anyways, kind of fun there. Yeah. Cash money. Oops, dropped my phone. Cover calls. You got to love it. I love it. Yeah. We are GameStop. Notes, warrants, estimate, cash money. Here you go. There's the confirmation that their marketable securities are debt. It's just long-term T-bills. They did not buy any stocks with this. It's debt securities that have a longer than 90-day but less than 1 year time horizon. So it's 6 month, 9 month, or 11 month, was 1 year, but now time has passed. Those are the investments that they made, and they did a decent amount of it. So they rolled, what was it? Sorry, this one I'll just stick here where it was. How much did they roll into this? About 1.5 billion. that they moved from cash, like from 1 and 3 month T-bills to like 6 to 12 month T-bills. So they're using a higher portion of cash. There you go. 1.7 bill that they locked up into some longer term rates. It's pretty nice. No stocks though. They're not buying yet. Still holding France for sale. Digital assets is all it is. Life. All it is. Life. Warrants. We got it. %50 volatility. GameStop Pro. Vendor allowances. Advertising expenses. Look at that. Look at that. Their advertising has gone down again by half. Again, they spent a total of $14 million on advertising for GameStop. $14 million on advertising for a company that just did $3.6 billion in sales. I once had a business coach tell me that, what do they say? 10% of revenue you should expect to reinvest into advertising as just a cost of doing business. And GameStop's over here doing 14 divided by 300. I mean, it's not even on the mess. It's nothing. Not even close to 1%. Not even close to 0.01%. Yeah. Yes. Maybe slightly fewer pros this year compared to last year, which would make sense with the store closures. Interesting to note. Stores are down 30% year over year, a little more than 30%. GameStop Pro related obligations down more like 10% or 15% actually year over year. So retaining more than you are losing, but you are losing some business when you close, which is why they want to keep 1,600 of them in the US. It's pretty nice. Look at that. Look at that for the full year. 283.2 mil in operating income. 283.2. Let's get up here. Right here. This number would be 283.2. And this number would be whatever, 50 something million more than that. Let's go ahead and do that real quick. Are we back? Are we back? Look at this. Y'all thought Kenny got me? Honestly, though, like, are we back? When did I when did I cut off? Guppy's here. We back. What's up, Subway? Said YouTube did you dirty, but I hear you now. Look at YouTube trying to shadow ban the truth. Scott free. Okay, so like when I was like, there was a point where I was like, oh man, the chat disconnected, and like Oh man, let's try to wrap up. Like, did any of that come through, or was it just like straight a black ball for like 20 minutes there? Was it just silent for 20 minutes? I did see June 8th is Roaring Kitty's birthday. Anyone confirmation on did you make it to the bottom with me, or did it go AWOL like 20 minutes ago? Let me know. I want to give you a couple summaries here. Who knows how YouTube's going to store this, because I think maybe 20 minutes was just lost there. Guppy said, I wish I could confirm I'm multitasking. Well, let me fly back up and see if there's anything that I wanted to, there was something I wanted to give note for. It wasn't that interesting. Oh, the French sale. Yeah, nothing for 20. Wow. Sorry, guys. Well, hopefully the way YouTube records the stream is like, I don't know, cuts that out or something. I don't know. French sale. So 30 million of impairment loss has already been recognized. Currently, they have 146 in assets, 136 in liabilities for a $10 million book value. If France sells for $10 million, then basically GameStop will get 10 million in cash, and then nothing will happen as it relates to their earnings. If it sells for less than 10 million, then they will have a loss for the difference. If it sells for more than 10 million, they will have a gain for the difference that'll happen here in this line. So that's just something interesting to note, because we will get that sale this quarter. How are we fighting through here? Yeah, pretty fine. Pretty fine. What a bland day as far as the stock goes, but pretty exciting as far as the company goes. The other thing that's what the other thing I highlighted. NOLs. They have $384 million in it. I'm not even sharing. I'm not even sharing my screen with you guys. Golly. You down here, way down here. Okay. Number 7, that's held for sale. Assets and liabilities. Y'all can see it. Okay. There you go. Jeez. Every now and then someone accuses me of being a professional YouTuber, and I'm like, have you watched any of my videos? Like, I'm obviously not. Okay. NOLs. $380 million in NOLs, which is a 160 million increase from a year ago. So they are farming those international losses. But check it out. They break it down. 200. So basically, that's like the US NOLs plus Australia is that 380. But then they also have 1.36 billion in foreign NOLs. So I think they probably have to operate in the country where those NOLs were generated to capitalize on that. But they certainly could, right? If they expand digital power packs international, or at least to certain countries, like they'll be able to operate tax-free for a minute if they want to, with all the net options that GameStop can capitalize on. So pretty epic. I'm still alive, guys. Kenny did not take me out. YouTube did do me dirty. Someone just apparently. So now I'm live streaming from the hotspot on my phone. So it's probably pretty lame quality, but we are back. I will punch in all of these numbers into these numbers at a future time on my own time and summarize for you in a short form video some of my top takeaways. But basically, what did we learn from a numbers perspective? Margins continuing to increase year over year quite meaningfully. Operating income continuing to increase year over year very meaningfully. Net income increasing year over year meaningfully. And SG&A declining meaningfully. So the cost cutting, great progress. Again, operating income, net income, margins, all very impressive numbers. We also learned that they are using Bitcoin, not just statically, but selling covered calls to generate income with their Bitcoin. Also, very exciting. We got some confirmation that France, they already have the purchaser for France. So that will almost certainly sell during Q1. And that's another 300 stores that become off the books. We also got confirmation that they are basically done closing stores, at least in mass in the US. They finished. They're down to about 1,600 stores. Maybe they whittle that down to 1,500 over time or 14 over a longer time. But basically, they have the footprint that they want in the US, which means that we are about to see even more impressive profitability as they can shift their focus into investing into the stores rather than spending money on closing stores that they didn't want. We also got some great language as it relates to GameStop's potential acquisition. They said they're not in a binding agreement, but perhaps they already are in a verbal agreement or even a contractual agreement that just has a clause for an opt-out period that they are still within. But they're not in a binding agreement yet, but it will be a significant acquisition that costs a significant amount of money that they plan to use cash and debt and equity dilution to finance. So given that they have $9 billion in cash, they probably are going to buy something that costs well in excess of $10 billion, and that they expect a re-rating, a repricing to occur on the company, on the stock post-acquisition, and even probably post-news of the acquisition. The vote for Cohen's compensation is happening June 8th on the annual shareholder meeting, about 11 weeks away from today. Announcements that we could see between now and then include an acquisition announcement, as well as a France sale announcement. Probably GameStop is going to keep Australia, but we'll see if anything comes up with that throughout the year. Power Packs continues to be not material as expected and continues to be off balance sheet as expected by all signs, right? All signs agree. It won't be known for sure until it's reported. But with almost certainty at this point, these collectibles numbers are not factoring in digital power packs. They are just factoring in the graded cards that GameStop sells online, the physical power packs that they sell in stores, right? And everything else as relates to Pokemon and their collectibles business. So that collectibles business is operating quite well. In addition to that, digital power packs is operating quite well. I think we will see the materiality reach Q1, which would be announced in June, along with all the other things that will probably be in June. So overall, the runway has been set. The table has been set. The runway has been cleared for GME heading into this next 3 to 6 month window to see some pretty exciting times. So yes, I like the stock says. In other words, winning. Wonderful summary there. I like the stock. So those are some high level from their 10 announced earnings news announcement that we went through here. Appreciate you guys for being here. Appreciate the supers and the comments and the likes. Let's see how we did on, well, I already closed out my account tab. Where is it? Would this show it right here? Yeah, 3080. The subs and all of the above. I do appreciate it. Any last thoughts? Any last questions before we march on to another day? I am very excited to see. Do we happen to see anything post market tomorrow? I don't necessarily expect that we will. Oh, there is one other thing that I talked about that got blurred out, which is the fundamental floor. So I have updated the operating numbers. Income, it is 58 as before. In other words, in Q4 was $58 million more than operating income in Q4 of last year. With that $58 million improvement, we now see at close, right, at 22, whatever, 82 a share, or 22.83, GameStop's at a 20 PE. If you think that the floor is 15 because macro going bad, whatever, then you'd say the fundamental floor would be like $20 a share, which would be higher than the 19 and higher than the 15 the quarters before that. If you want to net out net out France and Canada and say, let's just look at the go forward business, trailing 12-month earnings for US and Australia would be 288. If you think that the floor, like the current PE right now for just US and Australia is at a 16.5. The deep low that we hit on December 31st got to a 16.35 following Q2 earnings. So do we see continued multiple compression as far as the deep lows? Probably so. Like we're already right now trading at a deeper low from a PE perspective than we were on December 31st on this point right here. But on a dollar perspective, we're 10% higher than we were on December 31st. So on a dollar perspective, the floor certainly seems to be rising and the fundamental floor also rising, but how deep can the PE ultimately compress? That's kind of the question. If you think that it will not compress below 20 and you want to take US and Australia numbers, then you're looking at like a baseline fair value of about $25 a share. And anything under 25, you would consider a pretty strong buy signal. If you want to be more conservative and you say, I don't want to net out US and Australia, I just want to look at the full business, and I don't want a 20 PE, I want a 15 PE, then basically $20 per share would be your deep low buy signal at that point. So anyways, none of these are meant to illustrate like, oh, the stock literally can't trade below X, Y, or Z, but it's more like what is most plausible as far as how you would fundamentally justify the company. If you want to net out Canada, but still go with a 15, then you're looking at like a 22 or a 21.83 floor share price, which I think this is like probably a healthily conservative way as far as illustrating a fundamental floor is something like that 21.83 figure. Obviously, if it does end up crashing to 20, then that's even 10% lower. So that's that much more of a deep sale, buying opportunity, etc. I would not personally be betting on it going to 20. I think it's more likely that the floor is rising and that the ceiling is about to bust. Probably doesn't break through the 32 and 35 until after annual shareholder meeting, but might start pushing up towards that between now and then. A lot of cards still being held in GameStop's or up their sleeve, close to the chest, etc. So overall, happy with the quarter. Nothing quite wow, although very important, very encouraging takeaways. Nothing incredibly discouraging or surprising on the downside perspective, and some solid confirmation trajectory as far as top and bottom line perspective. So overall, you got to love it. All right. That's all I got for y'all today. Thanks for hanging in there with me. I will see you in the next one.